Hi there, welcome to Trader. In this video we're going to be looking at my template for the Liquidity King. This is a higher time frame bias template looking at order book depth, mainly on a daily and 4-hour time frame. Let's jump in. Okay, so here we are on Bitcoin, currently in February 2023. Let's take a look at what's going on. First of all, as I say, higher time frame, daily and 4-hour. I do like to just view this on the daily first off. Okay, we've got just a nice clean price chart. I'm not bothered about overlays or anything on this daily time frame. Just a nice clean price chart to see structure, see what's going on, see the rises and the dips. Next, we've got an order book depth aggregation perpetuals, order book depth aggregation spot, and we've got our open interest perpetuals. Each of these is on a 0 to 10% range on the spot and perpetuals. Let's just have a quick look at settings. Here we go. So perpetuals markets. Okay, I've not got all of them selected. A few of them do skew the data, but here's our perpetuals markets. Here are our spot markets. Again, I've not got all of them on, just the big boys on here. And here's our open interest perpetuals, obviously. You could have perpetuals and futures. I'm not too interested in that really. I'm just keep it to perpetuals at the minute. And here's our exchanges. So let's take a look at what's going on. First of all, you can notice something very obvious from each section. Okay, and it's basically the rise and the fall in the order book depth. Now, what do we do and how do we find edge in that? So basically what you are looking at here on the perpetuals is the amount of liquidity in the market. How much, think of it as money. How much money is in the market? All right. With the spot market, very similar. How much money is in the market? How much supply or how much demand is in the market? Who's been buying? Has anything been sold off? And with open interest, you are basically looking at contracts in the market from perpetuals and futures if you do have it on there. Okay, so consider your open interest as contracts between two traders, shorts and longs. Okay, so if we just have a look at certain areas here, and we can see what's going on. If we look at, say, these areas here at all-time highs, what can we see? The first all-time high there back in 21, 62k, around that 62k mark. We didn't have a great deal of data back then, but what we can identify is the perpetuals market was highly on the rise, okay? And at that point in time, it was hitting 700 million. Spot market, 600, 700 million again. Open interest data, not the best for back then. It did come off a little bit. Okay, as price comes down off the back of that first initial all-time high, what happens? Liquidity drops. This is what you call liquidity dropping. Okay, so markets being flush, traders are out the market. Same with spot, same with open interest. Now, why is that? Well, for a start, on the spot books, if everyone's been buying and your price is up here, imagine you're a really, really large seller. Okay, imagine you've got hundreds, maybe thousands of bitcoins to sell, and everyone's been buying on the way up. Okay, imagine you want to offload some of that bitcoin. It's going to be very easy because there's high liquidity. We call this high liquidity. Okay, it's going to be very easy to sell those bitcoin to everybody else that's been buying all the way up, and they're getting caught off guard here. All right, very easy to sell bitcoin. As price comes down here, it's going to be very difficult. It's going to be more difficult to offload those large positions of bitcoin, spot bitcoin. In the same way, you can look at the perpetuals market. We'll maybe look at this all-time high here. Okay, big spike in the depth, big spike in the depth, big spike in open interest. If you're a perpetuals trader here and you've been long all the way through and you've got a very, very large paper P&L here at these all-time highs, it's going to be very easy for you because of the depth in the market to offload and take profit on that position. Okay, once the order book has been smashed on perpetuals and you're right down here, okay, it's going to be a little bit more difficult to offload that position. You're not going to be able to simply mark it, probably sell out of a very, very large, you know, perpetuals position. I would say I'm talking like millions and millions, hundreds of millions. Again, same with the spot market. If you've held spot all the way through and you're in that region, it's going to be very easy to sell. Okay, and open interest is very high as well. So open interest is telling you there's a lot of players in the market, there's a lot of contracts in the market, liquidity is thick, you've got really high liquidity in perps, there's a lot of activity going on here. Larger players will look at this and say, oh great, you know, I can offload my position then. Okay, same with this area here. A few other areas, like we've got one here, 47k, high spike in perps liquidity, high spike in spot liquidity, and a lot of contracts being traded because open interest very high as well. Similarly, in a few other areas, you can see it kind of, you know, found its range there, and you've got some highs. Again, big liquidity here. I remember trading this one because it was pre-FTX crash, and we were at 20k. A lot of people were, you know, doing classic TA, saying, yep, we can buy here, we can buy spot or whatever. Price should hold here because classic TA says so. I know that in the trader group we were being very, very cautious because liquidity was high. You know, liquidity was getting as high as your 69k all-time highs here, and the you know, spot was on the rise and open interest was on the rise. We were very cautious and expecting lower prices, a sweep of these levels. Did we expect this? No. You know, news events bring the bigger nuke, but we were certainly cautious here. Okay, so if we just eyeball some levels, basically what you can see is, let me just get a horizontal line up. You could say at the minute, because we've got a little bit more history now, that on a perpetuals market, you know, at the lows, you're kind of like at 600 million, 600, 500 million, and your high point at the market is 1 billion. Okay, so anytime perpetuals market's getting up to 1 billion, you know, it's kind of like a take caution area. Similar with spot, you could say spot 250 million depth, and the highs, let's mark those highs. So 570, say 570, 600 million. Similarly on open interest, when your open interest gets absolutely nuked, loads of players are out the market, are being flushed, you know, negative 900 mil. And then to the high side as well, you could call it 1 billion again. So 1 billion in open interest, like here, and over 1 billion in open interest on perpetuals. That's caution needed. You certainly don't want to be swing long or anything. You know, look at this. You certainly don't want to be swing long in these areas where you're looking at 1 billion open interest, 1 billion, you know, in depth on the order book. Big players can fill the positions for sells or take profits. You know, and you're up at over 700 million in spot books. Okay, so yeah, you can load this up and just draw some lines yourself and have a look at what is going on here. To the other side, when we drop, what does that mean? Okay, so the less liquidity in the market, so when we absolutely nuke, like these areas here to 15, 16k, it's then very easy for players to come back into the market and fill positions. Okay, it's very, very easy. Everyone's been nuked out the market. It takes very little volume to then push price up, as we can see here. Okay, perps market's nuked, spot has dropped off, probably panic sellers, open interest is nuked. You know, this is the time when the whales come in and say, right, everyone's out the market, they've been flushed, great. You know, very easy to get back in. Some very volatile periods as well, but we can see here, flush, 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 flush. Similarly there, nuke, drop down, okay? It'll be the same over here. This was a very choppy zone, I remember this, but you know, on that initial drop, probably the one that took everyone by shock in that May period of 21, perpetuals markets dropped. Not much history there, so it did go beyond that kind of 600 million mark. Spots dropped, and open interest is absolutely nuked. Okay, so that's it. That's an overview of what is going on in the Liquidity King template and what we look for. And as I say, it's not a enter now trade. But what you want to be doing is you want to be cautious after you've got a big drop. Look at the liquidity in the market, see what's going on, and then you want to be going to your order book aggregation and your volume. Have we got any bull divs? Is there any demand on the order book? Okay, that's what you want to be looking for. As we rise up, go to lower time frames, 15-minute or so. Have we got supply in the market? Okay, have we got spot supply in the market? Are perpetuals coming out? Okay, have a look at your Binance futures order book. Have a look at Binance Spot. Have a look at Coinbase. What's going on? Is anyone selling? Okay, there's people selling here, right? And I know liquidity is very high as well. I need to be careful because what happens? We drop. Okay, liquidity is high. Have a look at your OBD. Is the supply there? Because we drop. Similarly, these ends, we're absolutely nuked. Go to your OBD on lower time frames. What's going on? Have we got demand? Yes, we've got demand. Lower time frames, maybe look for a long. Okay, so I hope that's made that a little bit clearer. As I say, open this up, Liquidity King, load it for yourself and make sure you save it and have fun. Cheers.